Good evening, everyone. Thank you for taking our time today and joining us for an evening of discussions and learning around impact investing. I am Asta Thilwal from LetsVenture, your host for the evening. Let me start with introducing Impact Investors Council and LetsVenture, the two organizations behind this gathering today. The Impact Investors Council is India's preeminent national industry body to strengthen impact investing in the country. It represents a strong and cohesive organization which is committed to increasing the flow of impact capital to India. The key areas of focus include evangelizing the India impact story to investors, government regulatory engagement, and leveraging research-based thought leadership to support the growth of the sector. IIC has the support of over 50 esteemed members and partners, which are a mix of international DFIs, international foundations, domestic impact venture funds, and ecosystem builders. Moving on to LetsVenture. LetsVenture is a pioneering marketplace for early stage startup investing. In a decade-long journey, LetsVenture has raised over 110 million for 650 plus startups with a portfolio value of over $11 billion. Its platform has more than 20,000 plus investors from 60 plus different countries, and over 35,000 startups have been registered with the LetsVenture platform. LetsVenture is backed by leading investment firms like Axel and Curated Ventures, and leading investors like Ratan Tata, Mohandas Pai, Sharad Sharma, Anupam Mittal, to name a few. Before jumping to the first session, let me just give a quick overview of what the agenda flow for the event looks like. So we will start off with a fireside chat on the topic impact investing in India, current landscape and opportunities, which will be followed by an impact investing course launch that we have in store for you. And last but not least, we will have a panel discussion on the topic impact investing to empower change and wealth creation. With that, allow me to welcome all of you again, and let us dive into the first session of the evening with my colleague Saina, who heads private market expansion at Trika, which is a LetsVenture sister company that enables investment in growth stage startups for family offices and UHNIs. Over to you, Saina.
Thank you, Astha, very much, and welcome everyone. Absolute pleasure to be leading this session today. And, just in the last 3 years that we've been working with family offices in India and outside, just the interest around impact investing, understanding better what ESG really means on ground in the technology startup space, better understanding what sustainability of businesses means, has picked up momentum, right? We see this come up more and more in conversations that we have with family offices. So it's an absolute pleasure to have two stalwarts who have put their hearts and minds behind sustainability and sustainable investing. Let me introduce them one by one. To begin with, Leena Dandekar. She's the founder of the Raintree Family Office and the Raintree Foundation. Leena Dandekar, in her previous avatar, was associated with the Camlin Group across multiple businesses in the pharmaceutical as well as in the fine sciences space. And as the family received an exit from the business, she has become a strategist and overseeing their portfolio of investments. Most important for her is actually balancing social and economic returns. And we'll talk about how Leena is doing that with Raintree. I'll also like to introduce Guneet Banga, who's the executive director at the Caravel Group. Now, Guneet heads the Caravel Sustainable Investments, CSI, a dedicated vehicle that has been created by the group for investments in impact, ESG, and building a sustainable line of businesses. Guneet, under his leadership, oversees investments in public equities, ETFs, fixed income, as well as private markets. I think all the time having that lens of how you can do better with impact. Guneet is also the general partner at ERA VC, which is a Singapore-registered private investment firm. And we'll talk about more of what he's doing with ERA and sharpening the focus on startup investing with the lens of impact. Right. So warm welcome to everyone. Thank you, Leena and Guneet, for joining us today. I thought what would be a good way for us to start is actually for each of you to draw and tell our audience a little bit about your own personal journeys and motivations towards taking up sustainability and impact investing as a core focus for your family offices. So let's start with you, Leena. Why this particular lens? Tell us more about your journey.
Saina, as you said, we started our new portfolio away from family business which had most of our portfolio, was invested in our family business. We started with a fresh start when we rationalized management and ownership in the family business. Our family was among the ones who came out of management as well as ownership. And it really gave us a fresh start and a need to look at what do we have, where did we come from, and where do we go from here. And I think that itself is a whole lot of introspection on what is our legacy. It's about 100 years plus. How do we take the best of that going forward, and how do we give meaning to ourselves and the portfolio that we now needed to create? We needed to create day jobs. We needed to create meaning, purpose. We needed to make sense of the loss of identity that we felt to some extent from having exited the family business. In that process, Saina, I started looking at philanthropy and impact investing as my day job to begin with. Initially, it wasn't all about the family. It was initially about what do I do next. And while our philanthropic model is well established now, and we all kind of, that's for another day and another discussion. We also came across impact investing, and we said, we have been very fortunate that we have this great start. And how do we take this to use capital as a means to see what we want to, what we want to do, what we want to happen. From that angle, I think we had these talks at home. Over a couple of years, we all realized we feel very strongly about climate change, especially my children feel very, very strongly about climate change. Back then, they were early 20s and they had about 8 years of life left, and no predictability for weather patterns or rainfall or drinking water or how hot or cold it's going to be, and food. And you see Mumbai now, because if we had an intensely hot summer, we now have tomatoes in shortage. And now we have too much rain, and we're going to have tomatoes in shortage again some months down the line. And it doesn't leave anybody untouched. And we said, money makes everything go round, and money is a very powerful mover. It can make things move. It's a very powerful tool, the most powerful we have in our human-made social systems. And we happen to have some spare change and said we can apply that to the change that we want to see. And therefore we chose then climate, sustainability, some amount of circularity, more efficient resource utilization, greener technologies, some amount of industry 4.0, looking at moving from very resource intensive industries to making them more and more efficient, greener. So that's like the kind of gamut of things we look at, yeah. And it came from the fact that, as a mother, as a parent, as a family, with young adults in their 20s, we felt that the best thing we could do with our capital is to try and make a change in these areas. We also felt we had the patience to be able to do it versus many others who have more shorter reporting horizons and shorter milestones to be accounted for. And therefore, we dived in, not knowing much about the sector, but 5 years down the line, I'm happy to say we're not as ignorant or naive anymore. And back to you, Saina.
Yeah, we'll talk about some of your learnings along the way. We'll also talk about the importance of patient capital, right? And I think what you're alluding to is the VC model, which needs to show certain growth, certain impact very quickly. And when I say very quickly, it's still a 7 to 8 year timeline, but quick in that sense compared to the patience that a family office or individuals who want to impact and invest would have. But let us first, better understand Guneet's journey towards, from a family office perspective, towards impact investing. Guneet, if you can encapsulate for us what brought you to this point. You're on mute, Guneet. You'll have to unmute.
Sorry about that. Thank you, Saina. Thank you for hosting us, and thanks for having this session. Lena, it's good to see you again. I think it was about a year ago when we first met at Prabhav. So I'm glad to see that you're still doing what we said. We all said we were going to do that back then. My journey is, I guess, different to Lena's in that I am a second generation. So the success and the wealth and I guess the corporate structure and everything that was created was done by my father, traditionally in shipping, commodities, logistics, and things like that in the 70s, 80s, and 90s, when we didn't know any better in terms of what was happening and what the effect would be 10, 20, 30 years down the road on the planet, on climate, on people. I spent 10 years working on Wall Street because for my father, it was very important that my brother and I both build our own reputations away from him and his name as, me going into a company as a 23-year-old, fresh out of college, cocky little kid. I would have been a bit of a pain to deal with, I think, throw my weight around. So I started at the bottom, worked my way up, and actually worked out of Hong Kong for almost a decade, covering Indian corporates and fundraising, both on the equity capital markets and debt capital market sides. I've met and have kept in touch with many of the sort of larger conglomerates. The Tata Motors is one of those, and so others. And then my father at that point was a member of a group, and he sold his equity in a company he had founded due to a difference with the other founders, and bought out the businesses which he was responsible for, which was shipping and iron ore and coal and China, which at that time was blowing up. So, and we had a pile of cash too, which my brother and I, both from asset management or invested businesses, took to I guess managing that with help from our private banks. That was in 2013 when we started Caravel. In about 2016, I think I had a very rough, and I'm going to be personal here, and I'm very open and vulnerable, and I choose to be because I think that's just the only way you can be. I went through a very messy divorce and had serious depression, and kind of took some time off working just to get my health and my mental acuity back. And during that time, I was in Thailand. I got ordained as a monk. So looking at life very differently from living in Hong Kong, where it's so fast paced, go, 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 to sitting quietly and not saying anything for a day at a time, days at a time, right? And also volunteered with some sort of abused women, orphans, and refugees from the sort of Cambodian border crisis. Anyway, during that time, my view on the world shifted. Like, we have all this wealth, power, status, whatever it is, and we still want more, and we're still not happy. Yet there are people who have nothing, who are escaping these traumatic situations, who are smiling every day, right? So for me, I couldn't see myself going back into the corporate world and doing the same thing as I did, just doing deals for the sake of doing deals to make money. And when I got back to Caravel, it was actually very fortunate that a friend of mine had just started was in the process of starting a venture fund focused on impact investing. And I'd been doing some reading on ESG and sustainability because that seemed to be the buzzword, and it interested me. So
yes,
while I was looking for something to do, so I said, hey, why don't I work with you? So, I invested in his fund as an LP and then eventually as a GP, and then was fully involved in the fund, sourcing deals, due diligence, research, execution, and then 3 funds down the road, that fund, we just closed our first institutional round last year for about almost $50 million, which, we fundraised during COVID via Zoom, which is even more challenging than fundraising in person, which if you've done any, you'll know. So that's kind of how I got started. And the more I looked into it, the more I thought, this is the right thing to do. It's what I owe the future. We owe the future. We've borrowed from the future. How do we pay it back? And how do we pay it back? With interest, right? I think 60% of the world doesn't have the ability or the idea or the notion of information around how much climate change is affecting the planet and affecting everyone, right? 40% of people do, but they don't have the means and the wherewithal to do it. So it's up to people who have the means, the wherewithal, the capital, and the long-term vision, as Lena said, to take the leading role in continuing,
in making a difference. Yes.
and making a difference, and making sure that humanity continues to exist, right? Because the worst case scenario here is the climate gets so bad, humanity goes extinct, and that's it. And that's not an unrealistic scenario. It's unlikely, but given where we are, it's becoming more and more real.
Correct.
So
Yeah, I know there's a very unreal scene happening in the northern part of India right now.
Yeah.
But coming back to you, Leena, I mean, and both of you actually, but starting with you, Leena, how is your definition or what you thought was in, impact investing? How has it evolved? What were you thinking about, when you all started? And if you can define what were some of the early investments that you all made or the approach that you all took, areas that you identified where you wanted to make an impact, and where you are today?
So initially, it started out with a lot of wanting to do good, not really knowing the methods. But when COVID hit, we had just been up and about for about a year and had not made any investments. And that actually was a boon for us because during COVID, we got back, and started studying all the ESG standards, benchmarked them, looked at impact standards, measurements, different organizations doing it in different ways, talked to a whole lot of experts, thought about how does this translate into the Indian context for small and medium industries. So you have an IFC who's dictating their standards on ESG. Now, what does that mean for somebody like me doing ticket sizes 1 to 5 million, which, in the global scale is really tiny. But every bit counts, and 1 to 5 million in the Indian context is a significant amount for all the young, entrepreneurs innovating in the small and medium space. 1 to 5 million is a good amount to invest. And so we kind of localized it, internalized it, went through everybody's methods and said, this works for what we want to do, this doesn't work, and tried to get the best out of that. And that was a boon because we had not spent any money before we were forced to look inwards during COVID, right?
How did you think of, your total AUM and how much you wanted to allocate towards impact investing? And then, of course, you arrived at a ticket size. You looked at,
Yes.
preferring growth
Okay.
stage. Yes.
I can tell you about that journey. Yes, of course. Like I said, everything we owned was an investable corpus. Of course, I have children in their 20s going forward to maybe need homes and startup capital for whatever they do, me getting older, health needs, all those needs. Because this is the portfolio we live off. We are essentially pensioners in that sense, as a family currently. And we put some of that away, put it away in trusts which are solid, in a side reference, made sure that, waterfalls were tight, succession was tight, ring fencing was tight. I was a single parent, lot of liquidity, kids being young. So did a whole lot of that in the beginning. And then we said, okay, now this is all we need. The good part, Saina, is, and I guess it's just about how we were brought up and really what our parents left us with in terms of value systems, everybody around us, is that our consumption changed not at all. And, my son used to collect records at that time. And I used to always scold him for getting records from all over the world because of the carbon footprint and the cost of shipping and all of that. And the only thing he asked me is, can I buy 20 records from the money we owned, which is like such a big amount, right? And that's really all the small thrills we had. And so because consumption didn't change, it became very easy to project what we need, how much we need going forward. We have put that aside. And then we said, now we have this, now what do we do with it? And we took a very bold call, Saina, to not make impact investing as an alpha strategy, sitting as one in asset class in that 10% that we would devote to alpha strategies. We didn't say impact investing would outperform anything. We didn't do any of that benchmarking. The minute we said it's a mainstream strategy, we committed mainstream capital. We had 30% of our entire investable portfolio, which is almost all our net worth, barring our houses, is in impact investing today. And we intend to take that up as a percentage to 50 to 60% in the next decade. That, because it was a mainstream strategy, it became a lot bigger amount than most families would deploy. That meant that if I had to do early stage, smaller ticket sizes, I could not do that many deals. There was just a bigger pot of money there waiting to be deployed. So therefore, we said we can't do small deals. Also, it was impact first, which meant I did not want to be wildly speculating. I did not want to, out of 10, making it big. I was not looking for unicorns. I was looking for, my family came from business. We were small and medium businessmen. I've seen them slog away with good ideas, steadily grow, make their mark, never having losses, always paying dividends. That's the kind of business I like. Boring, steady, plodding along, 20% growth, 10% growth, every year you grow. Honestly, that's what excites me. So I was never looking at wild speculation. What else? I mean, you can't deny the fact that private equity comes with speculation hand in hand, but we were looking at solid business models, creating that change with an intention where the product or the service with a very clear intention was addressing a problem that we cared about. And we were looking at something which would mirror what I had seen growing up, which was solid management, completely bottom, nobody looking for exits at a valuation. That kind of entrepreneur wasn't what I was looking for.
Correct.
I said, oh, Purane style ka business, let me look for those. For every startup and every unicorn we have, there are for 1,000 of the startups that grow big, there would be at least 1 million of these steady small and medium businesses. A lot of them are doing a lot of homegrown engineering, homegrown innovation. Indians are thrifty by nature. They're jugaadu by nature. They make everything work. They make every resource go that last mile. And that's what we are looking at, right? Finally, to go towards a greener universe. We are looking at efficiencies. We are looking at how do we make everything greener, incrementally, one turn of the screw at a time. And that's the philosophy of business I was looking for. And I said, no, we won't do what everybody else is doing. This is what I understand. I come from here. This is what I understand. This is where we will go. And honestly, it's been a great journey because we have brilliant entrepreneurs, we work with, and very solid. Nobody's looking for an exit. The valuation word really only comes in every time there's a round, but otherwise nobody's worrying about it on a day-to-day basis at all. And that's where we came from. It's because our portfolio was bigger that we looked at bigger ticket sizes, because we didn't want a very big portfolio to manage. That ticket size meant growth stage.
Correct.
It is very logical that that's what could happen. We could not do what everybody else was doing, which was trying to find the unicorn. We didn't want that.
I think Guneet has taken a different approach, and I think he's been waiting to talk about that one. And
yes, Guneet, we agree to disagree, I guess.
I don't even think it's disagree as much as it is, different strokes for different folks, and everyone ultimately working towards,
we all have the same goal, and how we get there, is our journey. As long as we're getting there collaboratively and without harming anyone else or anything else, right? I think my definition of impact is similar. It's like anything that has a positive effect on whatever business, or the business impact has positive effect on its stakeholders, the environment, employees, the world, whatever it is. But that it's also an intentional. It's not a byproduct of. So the intent of the investment is to have this positive gain occur, because every investment has an impact, regardless of whether we think about it rationally or not. Right? Negative. You invest in a tobacco company, you have an impact down the road of people smoking. Right? Investing in guns, people buying guns, shooting each other, things like that. So it's got to be a very conscious and intentional approach. And in my, I guess, early experiences with Era, we had 3 questions that we asked, and they were, will this idea transform the status quo towards a fundamentally better outcome for people and for our planet? Are these outstanding founders who strive to be the best in the world and the best for the world? And will this industry look radically different if this product, service, or business model succeeds? So basically looking at things that are going to be transformative to industries, but investing at them at a much earlier stage than Lena does. So by I think it's a function of we were raising capital, so we were, pilot funds. They aren't huge, right? And so we were also learning as we invested, like what makes sense, what doesn't. We were a global fund, and it was impact, all of impact and all of the world, right? And I think we learned very quickly that that's way too big a space to be trying to find deals in. I mean, just the sheer volume of things that were coming across our desks was, you couldn't get through 1% of those, right? So
Correct.
I think the second pilot fund, we focused more on sort of a niche around, there's a climate and a human frontier sort of. So, biochemistry and improvement in medicine and other things like that, and climate as the main focus of the fund. And now the fund is totally 100% focused. Era is at least 100% focused on climate deals. We've got 18 deals that are all tracking pretty well. Fortunately, because of the way we tell our founders to run, or we suggest to our founders to run, they're going to do what they're going to do because they're 24 and they know everything, right? So it's sometimes a little frustrating, but we were I guess I'll speak for me. I'm risk management, right? It's all about risk management, and the upside will be the upside. But if you can't manage for the downside, you're not going to last for a very long time, which is why during the SVB crisis, only 8% of our portfolio was affected in terms of cash that they held, and they managed to get all that back. And that was because we actually told them, diversify your sources of banking, diversify your sources of funding, and don't always look to raise equity, but also look at working capital, right? So for some of the portfolio companies that I am, I guess, the liaison or the contact with, we've arranged working capital funding instead of them diluting themselves further until they get to a certain scale, right? It's about, to me, it's, if you build the right thing or do the right thing in the right way, the results and the profits will come, right? And just given that the direction in which the world is heading, if you're not in that space, if you're not sustainability focused and have some degree of understanding about how your product affects climate, affects the world we live in, affects people around where you produce, then pretty quickly you're going to go out of business, right? Sustainable investing, impact investing, it's an insurance for the future. It's ensuring that my business today will continue to be fit for the future environment, right? Sorry. No, go ahead. I was just going to say, we also started investing out of Carawell Sustainable Investments. And so that's got a sort of public portfolio of sustainable bonds, sustainable equity funds, just to, which I've gone through and are as impactful as the public markets can be. I think there's room for there to grow. And I think that's the next stage we'll see, because a lot of the private markets are getting very, very overfunded. And I think your funding is being misallocated to the wrong companies. And we're going to see a lot more blow-ups in the next 12 to 18 months than we saw even in the last part of last year. So, we are patient, and we are also looking at a number of ways in which we can work on the ground here in India and have a climate dedicated fund or investment strategy that's based here, set up here with a team here, and hopefully we'll be able to announce something relatively quickly. So that's kind of where, what I think impact is and where we are today and what our strategy is. And
all right. So I do want to let all the audience know that they can use the Q&A window to put in some questions. And we will like to take a few of them as we go along. But, while we wait for some of those questions to start trickling in, I think one thing that we would like to discuss with both Leena and Guneet is, how do you measure a successful exit when impact investing, right? I think in the regular VC dynamic or for angel investors, it's typically, a crazy multiple on the investment that they made, right? A financial return. But what are some of the metrics or ideas that you all have put in place for yourselves and for your teams to actually measure what a successful exit will be for you?
Leena, would you like to go first? Or?
Yeah, sure. Okay, so the impact metrics, Saina, come in when we get in. So there would be things contracted, while coming in, saying these are some of the ESG moves that we expect you to do, or impact moves. But honestly, the impact evaluation happens at the time of entry, and then it continues throughout the time that we're invested. Because then when we kind of approving business plans and so on and so forth,
Yeah.
that's where you should make sure that there's no mission drift. You can't really start at point zero when you put in your money and 7 years later and forget to look at the impact in between. At the time of exit, it's more a financial return that you will talk about. The impact is a lifestyle choice, really. You have to live it every day, every quarter, how many ever times you meet the company. I don't think you can look at it at 2 points of time so far apart.
Okay. All right. Guneet, do you have a
Um,
view on this?
I sort of have a different view. I think the impact has to be built into the DNA of the company. So if you're not focused on solving a problem to begin with, and then coming up with all the financials and so on. When I meet with founders, I don't want to see projections of like 40, 50, 60% growth annually when you haven't built a pilot, tested it, and seen if there's actually a market for it, right? So for me, the impact comes along at an early stage, asking companies to disclose their and report their emissions and all the other reporting things that we have these days, and they're getting more, hopefully becoming synchronized into one global. It's too much, but I think what we do prepare our investee companies for is set up your framework internally, have 3 questions or 3 metrics that you want to measure, and we'll discuss those with them. And then
Okay.
so as they grow, as they become sort of more growth stage and can start actually measuring these things, because in the early seed Series A, you're still building a company. You can't be building a company and measuring the impact because they're both full-time jobs, really, right? And so as long as the impact is the guiding light and the outcome of what they do is a guiding light, then that's fine, right? We are willing to wait. And then haven't had an exit yet, but I will tell you the company that's closest to potentially exit,
Correct.
towards the Series D they just raised at a sort of $2.6 billion valuation, and we've been involved throughout. But they last year decreased, well, took 10 million plastic water bottles out of circulation because of that product, right? So that's impact happening as the company is operating. And that's not even to do with, what the product is. That's just a byproduct, a result of their product, right? So,
Interesting. I think, this is, I'm going to take Nilesh's question first, and of course, we'll come to some of the others. But I think and this is something that we had discussed from both of your perspectives, right? Nilesh asks, what is your take on the internationalization of Indian social enterprises, for profit, not profit? What is the association of impact investing with internationalization of social enterprise? And what are some of the roadblocks? And I think it'll be interesting for both of you all to reflect, because I do know that Leena now in 2.0 version of what you all do with Raintree, you're actually looking to deploy capital outside.
Saina, I lost you. I can't hear you at all.
All right. Can you all hear me now?
Now I can hear you, yes.
Yeah.
Can you repeat that question, please?
Yeah, so the question is from Nilesh. It's in the Q&A window, where he's actually talking about internationalization of Indian enterprises going outside and what could be some of the roadblocks for those companies. But I also want to put it in the context of
hello?
I lost her again.
I lost everyone. Yeah.
We all did?
I'm here.
Yeah, I'm here too. I thought
Looks like it's you and me, Veena.
How are you doing? Are you in India?
I'm not actually. Remember I hurt my back last year, right? When I was at the conference. That's still
Yeah,
healing.
Saina is back. Yeah.
Okay, hi, sorry. I think, it's raining here in Bangalore, so the Wi-Fi is a little erratic.
No worries.
But yeah, so I think we just want to discuss about, Guneet working towards bringing more offshore capital to India to fund impact, further sort of,
Yeah.
churn support as far as impact investing here. And Leena, you're looking to actually take some of your capital outside the country and invest in enterprises outside. So, answer that in that context of, companies from here going outside, capital coming here. What do you see as the future of global impact startups?
Mind if I go first here? Or,
Yes, yeah, please.
Yes, go ahead.
My fundamental view is that India can be the climate impact investing capital of the world in the next 10 years. And I say this for a number of reasons. Firstly, the demographics in India, 500 million people between 25 and 45, the biggest single consumer bloc in the world, right? You're tech savvy. There is a desire for newer, cleaner, greener goods and services. And there's people have the English language. There's also a hidden workforce in that the second and third tier cities are still being educated. So you've got all these newly educated people rising up. Furthermore, we produce more tech grads in the city of London every year, right? So just the demographics in our favor. Secondly is the diversity of India and the problems that exist within states and regions because of that diversity. So if you could solve a problem in India, that solution can be taken elsewhere around the world and tweaked maybe 10, 20% and used to solve a very similar problem. So in Southeast Asia and Latin America, in Africa, in developing countries, right? And so one of my kind of views is, as we develop these companies and these technologies, you have licensing out these technologies to developing markets instead of making them pay implement it, scale it in your country, have the impacts take place, and then you can start to pay us back over time, right? So that's kind of what I feel. The other thing is, I want 2% of Asian ESG assets come to India. That's a staggeringly small amount. It's given the population, the size of India, we should be getting at least 20, if not 25, 30% of ESG assets.
Right.
Why? Because of policies that are not friendly to international investors. Horror stories of international investors here, which may be true, but aren't the norm. And so my view is, we need to, there are already being some policies being put into place where international investors will be able to come through,
Correct.
whether it's Gift City or Singapore entity and all that.
Right.
We hope to answer that, I think, in some of our next sessions and panels, right? The granularity of how you can actually bring capital into the country. Yeah.
An initiative I'm actually discussing with the IIC now is, I'm on the board of the Sustainable Finance Initiative in Hong Kong, similar to what IIC does, right? And so having cross visits by investors and by founders to see what the lay of the land is on the ground. Because once people see how advanced our ecosystems are, companies are, there's a lot of that fear that exists in India because it's an unknown will dissipate. And I think getting one or two or a handful of really recognizable international investors into transactions in India in the impact space, which is what I hope to do as kind of the fund my investment progresses, is essential. You're giving India that of legitimacy, and I think after funds will follow. We're not going to be able to meet our net zero goals just by funding domestically. We need $22 trillion by the year 2060, which is what we said. That's not going to happen. So, my view is bring in international capital and make the market friendly. Because if it's unfriendly, why would you invest here, right?
Yeah. Leena, from your point of view, what is motivating you to actually look for offshore opportunities to invest capital? Do you also hope to perhaps bring some of that technology back into the country? Because you've spent time here now looking and scoring the startup universe, right, for optimal impact investing opportunities? Tell us your real ground experience.
So just to clarify, I'm not going anywhere. The capital we have deployed in India will stay in deploying in India, and along with whatever it earns stays in India. But today, 30% of our portfolio is in ESG and impact investing. We want to step that up. In an ideal universe, we will not make money and investing being our main business. We would ideally not make money in any ways which harm the planet or don't create a positive change. Now looking at 30% already deployed in growth stage enterprises, all of them are alternate. India doesn't really offer any listed public opportunities in the ESG and impact space. Obviously, nobody would put 50 or 60% of their portfolio in alternates. What do you do on a rainy day then, right? So it's just clearly, and now, of course, like Puneet said, GIFT City has come up. It is possible for Indians to look at overseas avenues given the framework. I mean, there are limitations, but there's also an opportunity. And so long as you're able to work with the system, within the system, I think it allows us to then look at a more ambitious plan of deploying capital to maybe the change that we would like to see. Obviously, I'm looking now, when I look overseas, the first few years would be more at public asset classes, because it would give that overseas portfolio and the entire impact ESG portfolio some amount of balance, which there isn't right now. But it also gives me an opportunity to then be an ambassador for India globally. I will still be very much connected into the Indian ecosystem. One change, I think the difference between what Puneet does and what we do is we are very sharply defined on our investment thesis onto the climate environmental framework. And so, that also in India has, again, limited opportunities at this point of time. Not to say it's not coming. It's not coming. But given our plans, we feel, and there's a whole lot of climate work happening in India, which is funded from overseas. Right? These funds are set up in Singapore or in wherever. And I can't really deploy money in them right now because I don't have an international jurisdiction I can even come back to India from. So looking at climate work, looking at 2030 commitments, looking at net zero commitments, looking at how much now Europe is committing, a large part of the world is committing now to climate, and the number of financial instruments, asset classes likely to come up as these deadlines come closer. We felt that we should also look at overseas markets for impact and ESG. It's just kind of broad basing our portfolio, not losing out on opportunities, and because being climate focused, there is a lot of work happening in terms of new structures, asset classes, which we don't want to lose out on, because as 2030 comes closer, it's obvious too little has been done so far. We're 7 years away, of 6.5 to be precise, and things are going to heat up. If they're serious, they're going to heat up, or they're going to throw their hands up and say, "We tried, we failed." We don't know, but we need to be where things will warm up.
I agree with that, and I just like to add that we have our international exposure through ERA, right? ERA does sort of non-Indian international global climate. We have one Indian company actually in ERA, VC, and then the Credible Sustainable Investments is sustainable public equity funds and public debt funds and sustainable bonds and things like that are more traditional, but are becoming more sophisticated and are actually becoming more impactful. I still believe fundamentally that the greatest impact that can be had is from the seed stage through the IPO, because that's when you're building the company. And that company, once it's up and running, is making an impact day after day after day. So if you build the company right and you invest in it right and it has the right sort of northern lights and vision statement, then the impact will take care of itself.
I think we are on our time to conclude, but I think we'll take this one last question from Robert Rubenstein. I think that would be a good question conclude as well.
Hi, Rob.
Right? What do you find the most effective way to get family offices to embrace an impact or ESG or restorative investment approach? Right. And I think, putting together this course and helping people understand the fundamentals of impact investing that we're putting together is one move in that direction. I think because once you feel empowered with knowledge, you feel a little more handle on what you can do with your money. But what has worked for you all in your in your circles to influence more people to move this direction?
I don't know if Lena had the problem because she was the top. She was the generation who was making the decisions. But for me, it took I had to prove that impact investing actually was financially viable, right? And that was
Right.
through small investment, and then a bigger investment, and then a slightly bigger investment, and then as I invested larger and larger amounts, the information and the sort of the hubbub around impact and sustainability was also growing, which combined with the successes, fortunately, of the first 2 or 3 investments I did, led to where we are today. I'm still not where I want to be. I'd like to be where you are, 30% of assets, or even 100%, right? And my goal is to one day get there. But it's anybody who's going to be doing this course and it's a next gen, be prepared to work your ass off, because you will have to prove yourself multiple times more than you would if you said, I just want to stock or run a stock portfolio.
Right.
Because,
Right.
that most of the generation above us don't really have the insight and the information. I know, Lena, you have spent a lot of time studying it, so you do. I'm not going to insult you into it, but I would think the majority of people don't have the level of in-depth knowledge that Lena does, right? Which makes it about themselves.
What's your take, Lena, for people who want to get started but are on the fence? What do you tell them? How do they take the first step?
Well, first thing you have to believe. I think for me, it's been easy because it's a small family of 3 and I lead it. And fortunately for me, my young mind kept up with my children's young minds. So I guess everybody in the family feels young. Not all of us look young though. But having said that, it wasn't a struggle. It's a very small family unit. So it was easy. I mean, we all bought in right away. It's never been a problem. It's never been tested, our commitment. But honestly, for family offices in general, even outside impact investing, I mean, it's high time the younger generation spoke up, because their priorities are so different from the elders who typically, especially in India, run the portfolios for the family, right? It's just dramatically different. You talk to anybody under 35 and you're going to not hear the same things at all. And that's just what it is. And I don't think enough philanthropists and enough family offices who are trying to use capital to drive a change realize they're not doing it for themselves.
Nope.
We're all has-beens. I am 2/3 of my life down already, right? And not that much to go. I'm doing this. Everybody who's a parent, everybody who has a next generation who they're invested in needs to know that we are doing this for them. Absolutely. The capital you invest today makes a change for impact 20 years down the line, 10 years, 15 years, 20 years down the line. It's not in the 3-year, 5-year, 7-year horizons that funds look at. And 20 years down the line, I am going to have a walking stick and I'm not going to step out away, too far from my house probably. But my children are going to be in the prime of their lives and they deserve to not be. I read an article today that they measured ground temperature in Spain at 60 degrees centigrade in the last week. Wow. And some days back they had droughts and now they have floods. Right. It's a manic. I mean, nature is pushing back and we refuse to change the way we think, even when the evidence is slapping you every single day. I really think it needs to be a world for younger people in all walks of life.
Absolutely agree with you. And one thing I will say is, governments we can't rely on because there's too much political infighting and cockfighting, and it needs to be family offices, institutional investors. Right. I read even corporates today. I read an article yesterday that if you take every company that's worth $10 billion or above in market cap in the G20 plus China, India, and their emissions are 67% higher than they were when the Paris Accord was reached. That's
Yes.
insane.
Yeah.
If those companies are that far off mark, how are you going to get them back to where they were and then to where we need to
Push
be?
it down further.
Yeah, I think
those
this is a
companies
good
aren't the
thought
solution.
for the next panel actually on how much of what you do for impact investing outside, how much of that must start at home in your own business, right?
Saina, if I can add one line actually to, I
Yes.
don't know who exactly your audience composition, but people like Guneet and myself and a few others who run family offices investing very boldly in that sense in impact. I mean, compared to the rest of our family office brethren, none of the wealth managers in the country actually give us an opportunity to address the rest of their clients. If somebody put us in a room with 25 other people as a service, they don't earn if I go and convert 2 of their clients to impact investing.
I think that's exactly
and
what
where
we want to do, Leena. Start making that change with LetsVenture and Trika. And we would love for you all to come and speak to, because we, like we started this conversation with, right? We get asked all the time, for impact investing, can you show us ESG startups and that sort of thing, right? But we would love to kind of formalize, and I think that is what this initiative is all about.
Thanks, Leena, Guneet, and Saina for a really interesting and insightful session. Moving on to the next segment, a very special launch for which we have Nakul Saxena and Neha Bhatnagar with us. I'll quickly introduce them, starting with Nakul. So Nakul is the president of early stage investments at LetsVenture, with a clear focus on enabling and simplifying startup investing for founders and investors. With over 25 years of professional experience, Nakul has worked hands-on with some of the most promising countries in the airline, banking, and technology sectors, with a specific emphasis on corporate sales, wealth management, and industry policy development for software products and startups. Welcome, Nakul. Moving on to Neha. Neha is a senior advisor at Impact Investors Council and has served the organization since its inception in 2014-15. Running the industry body as a co-member for nearly a decade now, she had the opportunity to not just witness the phenomenal growth of the Indian impact investing sector, but also to contribute in a small way. She has led different vertices at IIC, including international investor alliances, member relations, business development, and many core research projects. Welcome, Nakul, Neha. Now I'd like to request Neha to take this forward. Over to you, Neha.
Thank you very much, Asta. Thank you. And a very good evening, everybody. And a big hello to you, Nakul. It is indeed a pleasure to be launching this course with you.
Likewise, Neha, great connecting with you and all the people over here today.
Absolutely. So, well, as Asta mentioned, we represent an Indian industry body dedicated to India impact investing movement. We at Impact Investors Council aim to contribute to the growth of the industry by building knowledge resources, research and policy support, and self-regulation in industry. Basically, we are building a compelling India impact investing narrative. But why? What is the relevance of impact investing in India, and what is impact investing? Well, happy to share that these questions and much more will be covered in the course. But to help you get connected with the very basics, we are all aware that the need to address certain burning matters in India, like poverty or access to clean air and water, farmers' needs, climate, etc. All this has been on the radar for a very long time. But now there is an urgency to have an intentional desire to invest time, money, and effort into these sectors for the sake of our future generations, and also for the sake of the sustainability of natural resources. That is when a tool like impact investing walks in. Impact investing is an investment strategy that seeks to generate financial returns while also creating a positive, measurable social and environmental impact. It moves beyond the traditional approaches of philanthropy by providing capital to for-profit enterprises that have socially driven business models, and I'm pretty sure a lot of us know this, but I'm just trying to touch the very basics of why we are here. It gives us immense pleasure to share that in the last 10 years, we have witnessed massive growth in the industry within all the important sectors. According to ISE's research report series that annually captures the trends of India impact investing called 2022 in retrospect. 377 impact enterprises received close to $5.8 billion in investments across 411 equity deals in year 22. Today, the large chunk of investment in India impact investing is coming from international investors. So DFIs like CDC, FMO, USAID, FCDO, and international foundations like Dell, Rockefeller, IKEA, etc. They have been supporting our cause for a very long time. And India is surely considered the impact investing destination today globally. But now the biggest need of the hour is to bring in the domestic investors into the industry to enable angel investors, family offices, HNIs, the corporate sector to actively engage in India impact investing ecosystem. We wish to equip them with knowledge about the latest deal flow, the social enterprise data, capital provider data, investment summary, etc. Hence, today, IIC and LetsVenture has come together to launch a course which we wish to cover the gaps in awareness around impact investing and enable the domestic capital of India to join the force with solid comprehension and knowledge. With this, I hand it over to Nakul, an investment industry veteran, and who better than you, Nakul, to explain the relevance of impact to all the private market investors in the audience.
Thank you so much, Neha. Great to have, been talking over here. And I think it's very important for all of us to understand. I think why IIC and LetsVenture came together. I think most importantly, what has been happening is we've seen in the ecosystem, people talking about startups. IIC is a great institution, knows a lot about impact, and LetsVenture is the largest angel platform in the country. So for me, for us over here and the team with Neha, it was a no-brainer to come together to get you the latest information on impact available. Not only that, what also happens is typically everybody everywhere talks about various forms of investing, but nobody's actually covering impact in detail. And our first baby step over here today is to offer this online course through which we are able to address some of these points as well. Because what is also very important is that as investors, other than earning or getting an extra revenue or extra interest, if I may call that, you need to be able to make impact on livelihoods across the complete value chain, right? And that's where we together with IIC have come together to offer this course to all of you, where the aim will be to not only offer you simple gyan. This will be a very hand-on course, online course, which you're going to see, which is going to actually help you through case studies, use cases, permutations, combinations, many questions about whether impact investing is better or traditional investing is better. All that will get covered. And I must tell all of you, when you do click onto the course, module 3 actually talks about how sometimes impact investing, you do get better returns than normal investing, but also you're creating an impact in a lot of people's lives as well. With that, Neha, I'd like to, together, maybe we can launch the online course as well. But just before we do that, I just want to go through this course content. And I think all the viewers over here, people over here, you will see, and like I said, module 3, have a look at that. That's really, really interesting. All of the other modules are also very good, and it'll give you a perspective about how do you choose a deal, not only related to normal investing, but actually how do you choose an impact startup, right? And how do you graduate to that level? My personal name, honestly, and I like to put a number out there. I mean, I know we've not discussed this, but I think these are baby steps. Maybe the group over here and this course are baby steps to have maybe 100, 150 crores being invested in the next 3 years through angels. And that for us will be a very, very big opportunity for us to start kickstart that process. So with that, Neha, let's maybe take the course online.
Absolutely.
And to be associated with IIC as well.
Likewise, Nakul. Thank you very much. Over to you, Astha.
The next session for the evening is a panel discussion. on impact investing to empower change and wealth creation. For this session, we have a very interesting group of founders and investors joining us. So please join me in welcoming Nagaraja Prakasam, Prabhir Korea, and Aniket Dogar. I'll quickly introduce the panelists, starting with Nagaraj. So Nagaraj is an angel investor, mentor, and fund advisor. He has invested in 31 startups across 65 plus rounds, out of which he has led 16 deals. Nagaraj is currently a partner at Acumen, a $100 million impact venture fund based out of the New York. Welcome, Nagaraj. Right, so moving on to Prabhir. Prabhir is the Vice President of Philanthropy and Impact at Waterfield Advisors. He has a rich consulting experience across sectors such as carbon footprinting, offsetting, sustainable agriculture, CSR, and philanthropy. Welcome to the panel, Prabhir. Hi. Our next speaker is someone most of you would already know from his impressive pitch at Shark Tank India Season 2. Join me in welcoming Aniket Dogar, who is the co-founder and CEO of Haq Darshak. So Haq Darshak is the first Indian social enterprise to digitize government welfare programs on a single platform and has helped nearly 25 lakh low-income Indians and 50,000 micro businesses claim 5,000 crores in government schemes. Awesome. Welcome, Aniket. Also, we have Nakul joining us to take this panel forward. So over to you, Nakul.
Thank you so much, Asta, Aniket, and Ravi. Great to have you all of you here. And it's great to connect online. It'll be great sometime to meet all of you and the other people who are over here as well. I think we've seen in the impact space about 5.5x growth in the investments which have already happened in the last 7 to 8 years time frame. And we are seeing a lot of people coming into the space, not only for the earning the interest part of it, but also creating impact in the entire value chain. So my question to you, Prabhir, and with your background and education in environmental sciences, right? How have you seen in the last maybe 5-7 years this entire landscape evolving?
Thanks, Nakul. Firstly, thank you for having me. Am I audible? That's always the first question. Okay, great. No, I think, why even look back 5 years, right? Just look back about 3 or 4 years ago. The narrative was very different. There was a clear distinction between impact and philanthropy. And when we started going out and speaking to families about this, they were very clear. The philanthropists were very clear that, look, man, my philanthropy is going to go towards grants. Grants are a clear and easy way to give money to NGOs and see impact on ground. On the other hand, when we went to investors, we said, what do you think about impact investing? They said, I think it kind of does us disservice in the space, right? We are looking at returns. We want to be commercial about it. You are a wealth advisory firm, talk to us about that. Why are we looking at impact investing as an asset class? Of course, in the last, and if you were to ask me, and which you did, how the narrative has changed, has evolved, I would say yes to a certain degree, and no, right? Both. There has been a change, and I would say part of that change is thanks to the efforts by ISC, the efforts by people like Lena, for example, where she says, where she hasn't been in a room, she has actually changed many investors towards thinking like this. But it's also been because the ecosystem has really changed towards more positive impact. And what I mean by that is, India is now a country where we are trying to solve the issues of nearly 1 point, God knows how many billion. And we're no longer looking at getting them out of poverty, but we're saying, look, this is an aspiring group of people. And I like to look at it this way: whenever there's a problem, there's always a solution. Solutions can often be very lucrative, as Aniket has rightly done, right? With Haq Darshak, he's taken something which has, honestly, 10 years ago, nobody would have even conceptualized, and made it a business. And like Haq Darshak, you're seeing multiple other companies come into play. And the other thing, I think the second important thing that we're seeing in the ecosystem, and which Lena rightly sort of said in her own words, is that we're a Jugadu country. We're a country that likes to find solutions to problems, which also is one of the reasons why we're the second largest in the startup world, right? You have United States, but following relatively closely is India. And if you put the two together, you're primed for an impact ecosystem, which is not only going to have impact, which is, I think, a given, but hopefully have impact in a very commercial sense. So yeah, I do see it evolving. Hopefully courses like this will also bring more individuals into the space. I think one of the issues that we have faced at Waterfield is how do we teach people that impact investing is not only about putting your money into 5 top funds in the space. There are different avenues you can go. There's impact debt. There are different levels in which you can come in at equity. How do you even measure impact? And I know we're going to be talking about some of those points, but we do it on one-on-one basis. I think through this course, maybe people will be able to do it a little better. So yeah, just my 2 cents on the subject.
Lovely, Praveer. And I think I'll catch up on that specifically. How do people measure impact? Because that definition keeps changing across many people you speak to, but just hold on to that one and I'll come back to you on that. So Aniket, as a founder, and I'm taking you as the representative of the startup ecosystem, if I may, how are you seeing in the last 5 years, are investors opening up to entrepreneurs like yourself? What is this? What are you feeling around it?
No, thank you, Nakul, and thank you for having me. I think 5 years back, actually, when we started Agdarshan, we were only, I remember the first set of capital we got was from competition wins in IIM Ahmedabad, IIT Delhi, NASSCOM. We pretty much won all those competitions. So I think sometimes that entire Startup India program really helped. But I think as I was hearing the last discussion as well, I think now there is a lot more kind of an eager audience and kind of a lot more conversation with family offices. We've experienced that at Agdarshan itself. There is a new generation of family office folks also who are coming in and who are trying to kind of be more innovative with finance. The challenge with social enterprises like us is that in India, there is still while at the funding side, I think people are trying to be innovative. Like Praveer mentioned, there are so many brilliant enterprises doing some fantastic work in solving problems bottom up. But our regulatory framework still remains the same. Like I still have to follow MSME, either I'm an MSME or I'm registered as a startup. So I think that incentivization to solve bottom up, and then again, it links back to all the other points that were being mentioned on how do you measure impact, how do you register someone, how do you recognize an organization which is really solving something which is a societal problem. And it's solving for not just absolute poverty, in some cases multi-dimensional poverty, right? Like how do you identify that? How do you measure that? And then recognize organizations and then get them those benefits. So that's still not there because in India there are 2 huge sets of domestic capital. One is family offices, the second is corporates. And in both there are certain regulations which do not allow flexible finance, right? It's in a way, sometimes as an entrepreneur, I feel it's being discouraged to invest the regulatory framework. Like we raised around recently and it took us 3 months to file filings. We're still doing that. So I think the kind of, so I think that space that I'm not sure has changed honestly in the last 5 years. But what has changed is like for entrepreneurs like us, there is a lot more kind of audience and there is a much better kind of communication that happens with family offices and funds. And there are a lot more opportunities in India. And I'm going to I focus more on the Indian capital available because I think that in itself presents the best opportunity for entrepreneurs solving for India.
Interesting, Aniket. And I think the policy paralysis sometime when we face in government, I think it's happened in the normal startups as well. And I think we are seeing it to a large extent with the impact. And I think IISc over there doing a damn good job in trying to solve for those policy paralysis with the government as well. Nagaraj, I'll just come back to you over here. I think both Praveer and Aniket have spoken about various aspects, right? It'll be great to understand how do you qualify what do you call impact? And I think that's what Praveer was earlier trying to come to that as well. What do you qualify an impact? And has that definition changed in the last 3, 5, 7 years?
Yeah, absolutely. I think, 11 years back when I made my first angel investment in impact and we launched IIN Impact, I think all the talk is about the poverty element of it, right? Low income family. And there is this confusion about the social business, right? So when I tell my friends that IIN that I'm going to start something like a investment group called IIN Impact, they'll do social businesses. Then these guys are joking, what happened, all the other business are antisocial or what, right? So I think this is where the definition is in India, the definition people, which side of the bed you get up that day, the definition changes, right? So there's no standard on what it is. Everybody claims today is a social entrepreneur. And if you just start talking to them, you'll realize that, what he's doing is completely different. So back then, I think the only criteria was a low income family. What I call my definition of a social business is that either you buy a product or service from a low income family, or you provide a product or service to a low income family. You will know what a low income family is when you see it. We don't need to go with that, whether it is $1.23, there's $1.5, all this crazy talk that But if we just throw all that out, somebody when you see them, right? So that's the clear definition of it. So there's a lot of focus was happening in that. But lately, I think there is a good news and bad news. The good news is that the climate is creating a confusion in there. Somebody working about, I am just recycling plastic PET bottle, I'm a social entrepreneur, right? And then who's drinking PET bottle water? Yeah, all the rich guys, right? So not poor people are not able to afford a PET bottle water. So you're solving a rich man's problem, and he drank in a PET bottle, throw the bottle, and he's supposed to fix the problem, and you are using impact money or a donation money to recycle that plastic. So there is a problem. And that is where a lot of confusion today. The climate is coming into the mix, and the low income is, poverty, all these elements are all thrown out of the window, right? So that's a good news. So now we can merge these two together, right? I think Aniket is one of the Acumen investment. So Acumen, we put together a fund now. It's called Resilient Agriculture for a Smallholder Farmers. So if you look at the climate change, it's impacting the poor the most. Today, monsoon is delayed by 2 weeks, and then people are wondering about when would I sow it, but now it is double up. It's flooding now. So the 2 weeks back, we didn't have water. Today we are flooding. So all this is going to impact the poor much. That's why it's a great opportunity to marry this climate part plus the poverty element, where it is impacting them the most. Then there is opportunity for us to look at. The last element, the bad news part, is about, maybe that's a good news as well. 11 years back when I came in, there was one impact fund called me, said, why are you giving to Acumen? Acumen is an NGO, right? You're not going to get your money back. And invest in my fund, I'll give you 18% IRR. I said, even the mainstream guys have not given 18% IRR. How you are going to give me? So no, it's just a VC model, just the space is different, and don't worry, we know we have done it and all that stuff. And the fund has disappeared today. So that's the good news, is that all the people who came in, thanks to CK Praglad's book on Fortune at the bottom of the pyramid, they all started digging, and where is the gold is, right? So all these people have left, and there are some impact fund are investing with the mainstream. So that's what now I'm wondering, is the mainstream change their thought process coming down, or is it the impact fund realize that I can't do it, they're going up? So it's a good news is that there are a lot of people moving up, saying that next 500 million I'm going to top. The bottom 250 million is vacant today. So it's a great opportunity for really somebody want to invest, and including the climate element as well. I think that's the part I was just received my book copy has come. So that's the point I'm talking about today. Climate gives a fantastic opportunity for the poor today. I call the poor as a climate preventers. Today, Elon Musk makes $1 billion, selling carbon credit. But I have now 9 million viewers in the country, and start calculating the carbon credit, and how can we give the carbon back to them, right? So that's an opportunity today. A poor person living in Dantewada in a thatched roof house, the carbon saving of him with you and mine, and we're all poor, right? If the carbon is the new gold, who's rich? I think that's what I'm asking a question in this book. I think this is what a potential fantastic opportunity for us to relook at poverty in a new lens, and bringing in more investors back into this part that marries climate and the low income group. And there is a fantastic opportunity. So I'm very optimistic now.
So Diana, that's interesting. And I would love to get my hands on your book as well to get better understand some of those aspects as well. But I think both you and Prabir have been investing for a long time, right? More from the VC angle via the fund. And you, Nagaraj, a very avid angel investor. If you guys are finding it so difficult to find out what is impact and the right kind of companies to be investing into, how do you expect an angel investor or people I presume over here would want to understand how do I distinguish a good impact startup, right? And it's great, Nagaraj, to get your views and then Prabir, because I think this will help a lot of the people over here and prospective angel investors to understand how it is. And,
so this
one thing,
M&B,
do you think, one more thing, sorry, Nagaraj, do you think the VC is already there? Do you think the angels have a role to play on impact investing as well? So if you can just combine that, it'll be great to hear that.
Okay. Okay, so I'm going to just throw the probably rain in the parade on this impact investing part, right? So I think Neha knows that I've been talking about in her meeting as well some time back. The impact investment in India is pretty much dying, right? That's what the so-called impact investors are moving up. So anything with IT, they're just confusing, right? They just put an app and reaching to the farmer that I'm impactful, right? So there is quite a bit happening even in the mainstream about only the IT related stuff, right? You sell idlis, you have money, and you do some EV stuff, you will have it, right? So recently one guy said, I'm doing EV, I'm an impact investor, I'm a social entrepreneur. I said, EV is costing 3 times the ICE, yeah, and who are you selling it to, right? And where is this? It's an impact. So this is what that we need to probably look at. If you look at the VC model, I call it as a kind of a Ponzi scheme, right? Where I am investing, I'm just waiting for the next person to come in. He's waiting for the next person to come in. That's where the challenge comes in, that in India, even mainstream, there is not a single fund can put a $10 million check, leading a fund, only one person writing a $10 million check, zero, right? They all will join with 2 other guys from US. So that mainstream itself is struggling to raise in a single Series B check from India. But think about the social space. So that is why a lot of mission drift happens in social businesses. And start off with something about solving people's poverty and element, and they end up doing something else, right? So because the mainstream is wanting them to push back into it. So that is what my focus now is about. Start getting as much people in there. I think thanks to Chris, is a brilliant in terms of that, pushing all the HNIs in the India to put 1% in startups. And he has himself done 20%. So people like him is just kind of driving the ship. I have this foundation in Tamil Nadu called Native Lead Foundation. We said, no English, no PowerPoint. You solve a problem, we'll fund you. I have 240 angels investing in this local startup from Madurai. And we're not looking at the scalable Ponzi model. We said that recently we got an exit, we got 2x. I said, that's good enough, right? So because this person scaled to a level and there is some strategic partner came in and he invested money. So that's where that you can look at. So set the expectation clearly. Don't look at this 100x, 200x. That's happened only once for one fund. Even the mainstream, how many shutdown happening. So set the expectation properly in terms of what that return is going to be. It is going to be, a little above the philanthropy, right? Longer gestation and, lesser in terms of return, what you're going to do. In one of my other investment I'm talking about, and this company is doing relatively well, and there is no Series B player who would invest. And then we said, we'll just cap the exit and she's going to take a loan and buy us out, right? So like this, there are various other ways to look at. That is why I wrote in 2016 that the models we need for Bharat is not this current VC model. I was asking for the social stock exchange. I'm happy that happened today, but it's only for the non-profit. I asked for even for-profit, you should be able to raise debt, grant, equity, everything in there. Remove the pressure on exits, right? That's where the mission drift happens. Today, if you're a VC fund, you're a 10-year fund, and 5-year you invest, 5-year you have to recoup. And that may not be enough, right? I have a company, telemedicine, neurosynaptic communication. He's now on it for 20 years. When pandemic, he took off. All the aspirational district is putting now centers, right? He was working on this, solving this problem 20 years. Swachh Bharat, Gramalaya, that's one of the acumen investment. It took 35 years for government to wake up to build toilets, right? So this is what about real social businesses are. It's a long term. Don't just come with a very short term focus. Put aside. That's why I tell my friends, put aside a portion for Naga, right? And then don't worry about that getting anything back. But it's not a donation. You're going to get something back. Come with that very, very low expectation. Then you're not going to pressurize the entrepreneur that where is my exit in 2 years, and just tell them to, okay, go solve the problem of the rich as well, and that's where the drift happens. Yeah.
Interesting, Naga. I think you've hit upon a few things as well. I'll cover that with Aniket separately, but probably it'll be great to get your inputs as well in terms of typically if VCs are finding it so difficult, right? What advice do you have for angels and how to look at impact startups?
I think to Naga's point, it's important to clearly define what your impact thesis is, right? Maybe recycling PET bottles is important to you. At the same time, there could be individuals who come in with very unattainable impact ideas, which honestly are better suited for philanthropy. There are certain segments, say for example, mental health or core, I guess, biodiversity conservation, that is more dependent, I guess, on philanthropic capital or capital that has no expectations of return to come in. So first is clearly understand what your thesis is. Secondly, I think is obviously understanding that, as Naga rightly said, that return expectations should also be kept in mind. Right? You're coming in with, while hopefully in due time, and I've been speaking to a few Nordic funds, and the way they look at impact is very different from how we look at impact. It's far more mature ecosystem, where impact is so imbibed into the DNA of nearly every single company over there that they don't see commercial and impact as two separate buckets, right? It's one bucket. Just every company is going to do impact in a good way. India, we don't have that luxury yet. We're still reaching that point where we can say that there are extremely commercially viable solutions that are going to change millions of lives, that are both very impactful and also going to make you very, very rich. I don't think we're there in every sense of the word yet. So you need to keep your expectations slightly aligned to what's happening. And finally, and I will touch upon this later again, is how do you look at measuring that kind of impact? For a philanthropist, and I've worked a large portion of my life with the philanthropy and CSR space, it's been pretty much, I guess, there's a clear-cut way. There's an entire system that helps you measure, right? You could be measuring carbon, you could be measuring life change. So there's output and there's outcome measurements. In the impact space, that hasn't evolved yet. There are a few, I know Darshak does that, but again, they are rarities. They're not the norm, right? You still have companies who are not able to do that for various reasons. That's a larger question altogether. And I think you have another question on that. But right now, measuring your impact is important if you want to call yourself an impact investor. And then you also need to understand that the entities that you invest in as an angel might not necessarily have you're coming in at early stage, right? An angel investor, you're not going to come in at a Series C stage generally. At an angel stage, you're very unlikely. You have a team of 5 people. They're basically just trying to keep the company running. The chai coffee ke liye paisa nahi hai. Where on top of that are you going to go and ask them to go and come up with some massive impact measurement report for you? It's not attainable. So I guess keeping that in mind and keeping reality, I guess simple answer to your thing is reality check, right? Keep reality check in, right? And it's not unattainable. I think if the venture funds are able to do that, they're doing it at certain scales. If you, I guess, bring your lens a little smaller, start looking at things slightly differently, I think even there is enough and more of a market in the agent space. And we are seeing that, right? We are seeing families in our ecosystem finding opportunities. And the good thing is that opportunities come our way from families. It's not always the other way around. And that's always a good point.
Right. Interesting, Prabir. Aniket, I want to ask you, how do you as a founder balance financial and social returns to your investors? And what kind of, when in the early days, when you're looking at fundraising, right? What were the right set of investors you wanted on your cap table? What did you want from your investors?
So I think when I started, I think we were really looking at people who, like I think Naga also mentioned, were in it for the long run. I myself thought that, even coming to a conclusion that this works or not doesn't work, for me was a 5-year horizon, just to figure out the POC. And I believe at Darshak, we are at that point where our model works. It nowhere scales yet, even with reaching 3 million, because, right, so it, unlike a more commercial venture, I think in social enterprises, you have to be extremely patient. Of course, like any angel investment, trust the entrepreneur or the team. But yeah, I mean, really, this point, the point that Prabir also mentioned, right, really question organizations on outcomes. Because I think as we work in the ecosystem, by default, CSR, it measures outputs. Because again, going back a little on the regulatory framework, they have to measure year on year numbers. So it is output. As investor, we would want investors who are thinking outcomes, who are thinking long-term systematic change. Also, very clearly, we had a conversation with investors. What does success look like? Does success look like with your investment that we give you 2x, 5x, 10x return? Because then you might as well invest in a mutual fund or a long-term government security. What does investment look like in this case, solving for social security, right? And then I think as we have kind of gradually matured as an organization as well, and we've had our fair share of like a lot of failure and a lot of pivots. What we have also realized is that there is a lot of as we go forward, a lot of requirement of investors coming in who are thinking scale as well, who are solving for problems at scale, and that's where funders like Acumen have come in and kind of helped us shape. The other thing as we have also looked at Darshak, the problem is like something that I believe now a lot more is that as entrepreneurs you have to be completely obsessed with the problem in the social enterprise space, but completely agnostic to the solution, because you're solving a kind of a societal problem. You're kind of solving what a lot of people say that is a government problem. So you have to be agile with what the government solutions are providing. And that's where I think the investment has also kept pace. Like giving an example of Hagdarshak, we've become more attractive probably as an investment as AI has come in. You had Satya Nadella talking about an example. The first example of Chat GPT in Tamil Nadu when he was in India was about a farmer knowing about government schemes through the Chat GPT tool. So I think that all happens as the ecosystem evolves. But yeah, largely I think for us investor, like matching has more been about patience, about focusing on outcomes, and then to be also have adding a caveat that it's not like we have a lot of choice. So I mean, whatever, at the end of the day, a lot of times it's also like getting the investor and then aligning them. So that's also the reality.
So, and again, we'll try and create that lot of choice in terms of angel investors being available. Our endeavor would be to do that, right? And we are just beginning the journey over there. But to you talked about AI, right? And I wanted to understand, typically on impact startups like yourself, does AI play a role? If it does, how much? And can you name me an example or a thing on which AI in your company is playing a very active part or could play a very impactful part as well?
So I think AI has always been there. I mean, we've been talking about AI since almost 6-7 years. I think it's generative AI, which is from decision-making piece that we are now talking about AI in a very different way, right? Like, is the system becoming intelligent enough to now take decisions rather than just computing fast? So I think from day one, we were very clear at Hagdarshak. We wanted to build a technology platform. Our vision has been to solve the social security delivery problem in our lifetime. That in our lifetime is very important, because otherwise you can continue solving it. So I think AI is going to be like a generative AI in different forms that come in are going to be like much like an internet kind of revolution, I think, because it's going to be, as it gets adopted by more customer facing platforms, right, from social media to your Microsoft tools to so on and so forth, it's going to get easier. Of course, the kind of space we work with, and that's why at Hagdarshak we believe that to solve for the bottom 500 million, you need to have assisted services in India, not end-to-end digital. So we are trying to build for that agent, and there, whether it is discovery of schemes, so there are different stages in our process, which is discovery of, which is information. There, I think AI can play a massive role democratizing information. And this is not just true for social security, it's true for financial inclusion, financial services, livelihoods, and then, of course, easing the process on the government side. Because a lot of solutions on the impact side need government as a support player, and it is great to see that in a lot of ways government is, at least some departments in the government are being proactive on adopting tools and making sure that those become available. So I think that will also help in our work, at least at Hagdarshak, in basically applying for a scheme or storing digital documents and multiple such things. And this, I think, will also be true for companies in agri-tech or focusing on climate, as you know, a lot of these integrated tools will come together. But also, I just wanted to add that AI or the next form of AI is going to be a law rather than an exception pretty soon. So I think it's more about just how today we use different digital tools. I think it's going to be an innate part of anyone who's trying to either access digital tools or make platforms. It is going to hopefully bridge that gap faster.
Interesting. I'll come back to you with a follow-on on the policy as well, Aniket, as well, because that's a favorite topic of mine on policy impact happening for startups. But Naga and Prabir, can you share one story or one startup which you thought were doing really great, impactful, innovative stuff, and yet were good investments?
And what's the last part? What?
And were good investments.
Good. Oh, yeah. Okay. So the one it's able to marry this climate and also the low income stuff is Sahas, right? Sahas Zero Waste. I think she's one of my best investment, fantastic in terms of focus. And we ensured that we are staying away, bringing a lot of technology, because there was this big US fund came in. I said that, where is this technology? Can you put an app and stuff? We said, we are employing 200, rack pickers, right? The blue collar workers. And we want to bring them out of, picking up the waste on the waste, landfills and provide them a dignified job. So that's our goal while we are working on the waste management side. So, so this is a great example for the triple bottom line as well. I think Wilma has been last few years putting out the circular economy report, which is kind of, we are putting out our revenue as well. So she's setting a standard on what the triple bottom line reporting should be. And we are working with the UN and SASB standards in Europe. And we brought all of them together and get that report out. Our goal is that, we want to push the social stock exchange, start opening for social businesses. When we probably list out, I think she could be the first venture which can show a true triple bottom line for a startup, where we are talking about a ESG in the other part of it. The second one, it's fantastic. I'm very happy, is about Satwa. Satwa, we put out a passion. It will not look at the Ponzi scheme of that it's going to go scale up and do that, raise more money and all that stuff. So I'm very happy today with 500 employees. Satwa is doing fantastic work about marrying this knowledge. We call them the translators, right, from a development sector dialogue to a corporate, and how are we managing it. That's a great part, because when I mentioned earlier about this funding, the impact investing, the VC kind of model, is it worth it solving India's problem? I think that's where the CSR is a phenomenal opportunity. I started advocating many of these, our portfolio as well, start looking at the hybrid model, right? So Sahas is a hybrid model. There is an NGO that takes care of B2C, and B2B is done by for-profit businesses. I have Gramalaya, where Acumen invested. Gramalaya is taking care of these, community toilets, where Guardian invests in individual toilets, right? So that is where there is an opportunity for all of us to look at people in the impact space, leverage multiple channels. Don't just look at only the equity, then we are going to be pushed down on scale up. But if you start looking at grant and debt as well, so then you will be able to manage. Sahas today, doing really amazing 100 ton a day. I think the largest in the country, doing proper waste management. There are guys you can do recycling, but they're not going to take up your sanitary napkins and your soil diapers, right? So, and now Sahas takes care of everything. So make this campus I'm sitting, IMB, it's a zero waste campus, right? Everything is recycled. 98% is recycled. So that is the best part about it. And that is where the perseverance is important. I always talk about the social businesses. It's like the beauty pageant, right? The Miss Universe, once she put the crown on the head, people ask her, what do you want to do? She will say that I want to save the world and work for poor. Next year, she would be in Bollywood, right? So that's what happened with many of these social business entrepreneurs. They come with a lot of glamour, and social media goes crazy that, wow, here is a savior of the world, and you'll get in your head. But you'll see after realizing 2 years after that, damn, I'm sitting in a 42 degrees centigrade in Odisha. right? And my classmate is now driving Tesla in US. So this is where the problem happens on mission drift on entrepreneurs. So I think in terms of perseverance, I think these two as fantastic. I can go on a list, Go Co-op, Neurotoptic, all these guys, I've picked up. They are like fighters. They won't never give up. That's the strength I see in social businesses. Unlike this guys selling idlis and t-shirts, right? So if you don't raise the next level of funding, shut down and just go join Microsoft. I don't see that happening in the people in social business. They're amazing people and persevere and just work on it until they solve the problem. And you get a Padma Shri for it. Gramalya spent 35 years on Swachh Bharat. Last year he got a Padma Shri. So he said, my job is done. Government picked up Swachh Bharat, so I'll go work on something else. Yeah. Thank you.
Lovely, Naga. And what I hear from you is a lot of tenacity among the founders and working on mission modes to get things done, and yet being very good investments. What about you, Prabir? Any company stories you would like to share with the group? Good investments creating impact.
Sure. So maybe I'll take it from a slightly different angle. There are many, and coincidentally, Naga, my two picks would have been that, the Satwan team really well. They've professionalized CSR and philanthropy and all of this to a level which is unheard of, right? And they're excellent at what they do. So it's us that they've changed the whole waste ecosystem. In fact, we could do with 100 more of them in the country. But I'm going to go from a slightly different angle. So a couple of early this year, we set up Waterfield set up its own foundation, and given that it's our own capital that we intend to sort of utilize the space, gave us a little bit of flexibility to try and identify what the areas we want to eventually put money into. And we said, let's look at grants into social enterprises, but let's not look at it directly, because who are we to pick, right? There's a world out there. And one of the organizations that we particularly found very interesting is doing some excellent work in this space. I'm not sure whether they would even call themselves a social enterprise. Is Climate Collective. I think they're doing an excellent job across the board. I do have a bias towards climate. I won't deny that, but I do see that as a problem that affects everyone. Right? It's not just a problem that's being faced in tier 2, tier 3 cities. It's a problem faced over there as well. And Climate Collective is able to sort of blend capital in a way that I've seen pretty rarely in the space. What we intend to do largely with them is look at using grant money to actually seed a number of social entrepreneurs going forward. Primarily women entrepreneurs in the climate space, which you don't even think about it, but there aren't many, right? There actually aren't many solid women entrepreneurs in the climate space, not because women don't have brilliant ideas or can't be good entrepreneurs, because there's no funding going towards that. So I think they are one organization that I particularly feel a little fondly towards. Again, there is a list and the list will go on, but I think I'll stop with that one.
Thanks so much, Prabir. I have a lot of questions, Aniket, especially for you in policy, and that's a conversation maybe you should take separately as well. But I think people and Asta and my team have already started. I think they're overextending. I think the conversations have been really, really interesting. But I want to take two questions typically from the group which has come in. One is by Robert, who talks about, do you find that most investors regard impact as charity? Any of you could maybe briefly answer this, will be great too, because that's a normal thing which people think about. Is it true, false, or neither?
Can I come in with a slightly contrary view of this?
Please.
Initially, yes, right. The moment you think impact, and in fact, I've spoken to some impact funds and who are clearly, again, maybe to Naga's point, not in your conventional sense, doing the impact in tier 3 cities, working with your own farmers, but still making significant change, right? And trying to create that kind of impact. Who come to me and say, please, boss, don't tell people you're an impact fund, because the moment you use the word impact, there is this, I guess, preconceived notion that you are only in it for the good. There is no commercial viability. You're going to look at zero returns. It's full philanthropy. And that largely comes because investors at this stage still feel that the two are mutually exclusive. Maybe that's where the course can make a slight difference, right? But what we're also seeing is that, I think as I said earlier, the impact once your understanding of impact changes, and it can be a little more broad. See, impact can be many things, right? Impact can be right in the PEVC world. Impact can also be done in the philanthropy space, right? And how you want to bucket your capital is completely up to you. And that's what we work with clients very often about, is how do you bucket that kind of capital. So yeah, long story short, families do think that impact is just that, just impact.
Interesting, thanks. So Aniket, and last question, and we got more questions, and we'll probably come back to all the people have asked these questions with those answers as well. To the three of you over here, any one thing you'd like to talk about as a founder or as an investor on impact investing? And we've got a question talking about how is the social and the governance standards in a startup, right? Are you seeing that change happening? Any one of you could take that question, Aniket, Naga, Pravir.
What do you mean change happening means? What do you mean?
So the question is it hard to track the social focus and the governance focus in a startup, right? Are you able to marry both of them together in an impact startup?
Right. See, the good news is that, as I mentioned, it's no longer about the guys doing good at all with like gray hair and wearing kurta, right? So now even the suit guys also need to follow the ESG standards, right? So SEBI is whipping all the top guys, and this Blue Rock is saying that all these guys need to follow ESG, and even ESG, Elon Musk is working more on E side. The S was missing, so he got kicked out, right, from S&P. So I think it's a great news for us is that it's no longer we need to just wear a kurtas and say that I'm doing good. So everybody need to do good, otherwise you can getting punished left and right. That's one of the investments SolarOn I've done 10 years back. We were tracking ESG for 1,000 companies, and we started tracking in India. Nobody understood 10 years back ESG. So we've, so Vipul sold the company to Sustainalytics and went to Europe. But I just pulled them back now, said, no, now people understand ESG, Vipul, we need you back. So he just got into Satwa. We're starting an ESG practice in Satwa with Vipul. So this is the potential that we need to start looking at this. It is merging, right? It's no longer about impact investing and a social business that I'm a separate track that I need to work on. And today, even a corporate need to look at social business, right? Danone, the $5 billion company listed in France, is calling themselves a social business. Unilever is calling left and right, saying that I'm working on sustainability. So please buy my soap. Every soap you buy, I'm going to do something else to someone else. So everybody has to look at the ESGs. That's a fantastic opportunity for that. So you don't need to be wearing kurta to do good. Wear suit, but if you don't, you're going to get punished. Yeah. So with that, I'll take a leave. Yeah, Nicole, and we'll catch you.
Thank you so much, Naga. I think we've also extended our time. I'd like to thank you, Aniket, Naga, for spending your time and giving your thoughts as well. And our purpose over here, along with IIC, is that through the online course, be able to answer a lot of these questions. And these are the first steps towards that, and build a robust set of angels who could look at impact investing as well.
I'd like to now call Sabha, who heads the partnerships and learn at LetsVenture, and who has seamlessly spearheaded this collaboration on the impact investing course and event. Over to you, Sabha.
Thank you so much, Asta, and good evening, everyone. As Asta mentioned, I lead the partnerships and learn initiatives at LetsVenture. Learn is a platform that LetsVenture has launched to sort of, share best practices around private market investing in an easy to understand manner. And I think it's really been encouraging for us to see the interest and participation for the launch event, and certainly work towards creating more resources around impact investing. This is just the beginning, and we sincerely hope the course that we've curated equips you all with the right foundations and frameworks to get started. And we'll certainly look forward to getting, more such resources to you all going forward. I'd like to thank all our speakers for joining us today. Thank you to the team at Impact Investors Council and LetsVenture for sort of working together to put this comprehensive course together. And we seriously hope you all will take a look at the course, and you will find it as a right framework and foundation for you all to start your journey. And yes, that's about it from my side. Back to you, Asta. Thank you.